Hello, everyone. Welcome to another chapter of Payroll Accounting, Chapter 2, Computing Wages and Salaries. This is based on the Cengage course by Bieg and Stomberg from the 2025 edition Cengage Payroll Accounting. The chapter objectives are to explain the provisions of the Fair Labor Standards Act, define hours worked, describe the main types of records used to collect payroll data, calculating regular pay and overtime pay, and identifying distinctive comp plans. There are two bases of coverage under the FSLA, and much of the beginning of this chapter is defining who is covered under the FLSA, the Fair Labor Standards Act. There's enterprise coverage, and that includes all employees if two or more of the employees are working in interstate commerce or produce goods for interstate commerce, or the business has at least 500,000 in annual gross sales. This is also many nonprofits, regardless of annual sales volume, are covered. There's also individual employee coverage that includes employment in a fringe occupation that's closely related and directly essential to the production of goods for interstate commerce. This would be if it does not meet the qualifications for enterprise coverage, but there are individual employees that do meet it, they would be covered under the test. And so, even though the business doesn't cover the test under the enterprise version, the individual employees must be paid FLSA wages. And the employer and the employee are defined as follows. An employer is an individual that acts directly or indirectly in the interest of an employer in relation to an employee. And the courts have defined this and ruled on this very broadly speaking. And then there is also a six-factor economic reality test that determines whether an individual is an employee, and it's if they perform services under covered employment. And the courts use a totality of the circumstances test to determine this. And the six factors are opportunity for profit and loss, investments by the worker and employer, permanence of the work relationship, nature and degree of control over the work being performed, centrality of the work to the business of an employer, and how much can the workers use their own skill and initiative. And this is extremely relevant to gig economy work, DoorDash and Uber, and states and corporations determining whether these gig economy workers are employees or independent contractors. And it can also um, have a lot of other implications as well to determining employee or independent contractor classification. And there's also specific rules that apply to employees of corporations, domestic workers, interns, partners in partnerships, and statutory employees. And sometimes there are specific statutory non-employees, for example, direct sellers and licensed real estate agents. They are considered self-employed. They're specifically called out in the statutes, and so they're treated as contractors for federal tax purposes. There's some specific rules related to the FLSA and domestics, which includes cooks, butlers, caretakers, gardeners, and chauffeurs. They must earn a minimum wage if they work 8 or more hours in a work week in one or more homes, or earn at least $2,700 from an employer in a calendar year. Also, live-in domestics do not need to be paid overtime, and direct care workers, for example, if they're assisting the elderly disabled, they're subject to minimum wage and overtime rules if they're employed by a third-party employer. However, if they're employed directly by the elderly or disabled to take care of them, then the minimum wage and overtime rules do not apply. What is the minimum wage? So it's in, it is calculated as the total pay from the employer. That's all of that counts to the minimum wage, including commissions, earned bonuses, severance pay, on-call pay, and shift or weekend differentials. However, if it's discretionary pay, it is not included. For example, a discretionary bonus that gets paid at the end of the year or at the end of the week, but it's not agreed upon or promised beforehand, that does not count towards the employee's regular rate of pay that would count towards minimum wage. And there's other types of compensation not included in minimum wage, such as gifts, uh, payments to a profit sharing plan, vacation pay accrual, sick pay accrual, jury duty pay. That's not included in minimum wage. Guaranteed minimum number of hours more than actual hours worked, vehicle and uniform allowances, or certain sign-in and longevity bonuses, or parking. These do not count against minimum wage. And the current minimum wage is $7.25 an hour. However, there are certain exceptions. If the employee is newly hired and under 20 years old, there's a training wage of $4.25 that's allowed. Also, in higher education, retail or service or farm companies may pay full-time students at 85% of minimum wage. And you can find a full list of this on the government's website related to the Fair Labor Standards Act. And there are also situations where higher than the federal minimum wage must be paid, including employees of federal contractors must be paid at least $7.20 an hour. Contractors may no longer credit employee tips against and against that minimum wage because they're federal contractors, they must be paid 7.20 an hour. Any tips above that, um, or the employee's own. Also, the states might have higher minimum wages than the federal rate, and they also might say that tipped minimum wage is not allowed, training minimum wage is not allowed, etc. And employers must take the minimum wage that is higher for the employee. And all states have minimum wage and overtime rules. They apply to employees covered by FLSA and to those not covered, and the exceptions being Louisiana, Alabama, Mississippi, South Carolina, and Tennessee. And some states also have multiple rates based on the region, employer size, and for urban versus non-urban counties. And especially, so Minnesota has a different minimum wage rate for large employers, for small employers, but it does require that tips do not count against minimum wage. And there can also be city minimum wages, and there can also be living wage regulations that attempt to keep low wage workers' wages on track with cost of living. 100 plus cities have local laws requiring employers that do business with the government pay a living wage. And so this is different than the minimum wage because legally all businesses have to comply with the minimum wage. But there are cities that require businesses that are actively doing business with the government pay an even higher wage that's actually a living wage that allows employees to actually be able to live on their income. And some states now include private industry in these regulations as well. And tipped employees customarily, um, so it's defined as a tipped employee is defined as a employee that would customarily receive $30 or more per month in tips. And the minimum tipped wage per hour is $2.13, and that's because the employer may take a maximum of $5.12 per hour credit of tips against the minimum wage of the employee. And so it's it might be calculated differently based on state law, but talking federal regulations here, the employee must make $7.25 an hour when combining tips and wages. So for 40 hours a week, that's a minimum of $290 gross. And the tip credit remains the same for overtime calculations, which is important. We'll see an example here on the next slide. Because, for example, if an employee uh, makes $750 in tips per week. So that's enough that it's definitely going to cover the minimum uh, tipped amount. So what's the minimum the employer can pay Raquel for 47 hours of work at Christchurch Bar? Well, 40 hours times $2.13 for the 40-hour regular pay minimum wage, plus 7 hours times 1088, which is time and a half, plus 1.5 or time and a half times the minimum wage is 1088 per hour, minus the 512 tip allowance, comes out to a total of 125.52 for the week. And once again, the minimum wage for tipped employees of federal contractors is $17.20 per hour, and there's no offsetting tip credit allowed. And here's another example of tips received for a 40-hour work week. For example, uh, receiving $43 in tips, the employee, that's less than $5.12 per hour in tips. So the employer has to make up the difference between the 290, which is 725 times 40. So 290 minus $43 is 247. That's what the employer must pay the employee. And then in another example, the reported tips are 1,189. That's far above the $290 minimum. Um, and so the employer pays $85.20, which is the tipped minimum wage of $2.13 an hour for 40 hours. And service charges cannot count towards the tip credit. They're considered wages of the employee and subject to regular tax withholding. Now, tips are also considered wages of an employee and subject to tax withholding, assuming that they are properly reported. And then, of course, as a reminder, this course is the 2025 edition. There are new changes, of course, with the One Big Beautiful Bill Act and no tax on tips or overtime. Highly recommend that you watch update content on those topics. They'll be on, I won't be covering that because that's not a part of this particular course, but it's important to stay up to date on payroll regulations, so keep that in mind. Also, if 75% or more of employers agree on a tip rate for various occupations, then the IRS can set that and assume that employees are making that amount of tips. And then the employees are required to report their own tips over the predetermined rate, so that they're still paying taxes on those additional tips. And also, the employer is required to report any employee violations to the IRS. And this really, it, it the IRS knows that service industry workers are receiving tips and they want to make sure that they're getting their cut of those taxes. And even with the new One Big Beautiful Bill Act, no tax on tips, that's just federal income tax. But there still might be state taxes depending on the state code. There's still FICA tax is still charged, um, both the employer and the employee portion. And it's also limited to $10,000 in total tips or overtime in a year. Just to give you a brief summary of what the new regulations on top of this include for the new tax changes. So there's a lot to consider, and the tips must still be reported. And in the cases of two jobs performed by one worker, the tip credit can only be applied to the job that qualifies as tipped employment. For example, if an employee splits their time 20 hours as a dishwasher, 20 hours as a waiter, they must make, and the dishwasher does not get a share of the tips in this hypothetical example, then they have to split, they must be paid the minimum wage, no tips, um, for for 20 hours, and then the tip credit can be taken from the other 20 hours when they were actually making tips. There are also some exceptions to, there are also overtime provisions and exceptions to those provisions. So the work week must be established by a corporate policy. For example, Monday to Monday, or for example, Friday to Friday. And it must be 7 consecutive 24-hour periods or 168 hours. For example, 12:01 a.m. Saturday to 11:59 p.m. Friday. But they could pick which day based on the business. And if the state's overtime rule is more generous than the federal law, the state law is followed. The FLSA sets overtime pay at 1.5 times regular pay. And if hourly rate employees work in pay periods of 2 weeks or longer, the employer can elect to give employees time and a half hours off for each overtime hour. And that's paid time and a half off for overtime hours. So they really effectively are making time and a half, and it also must be in the same pay period. And exceptions are as follows. So a hospital employee, if um, overtime for 80 plus hours in 14 days or over 8 hours in any workday, whichever is greatest. Retail or service industry employees, if their regular weekly pay rate, including commissions, is 1088 or more, or the employee is receiving remedial education. And under uh, the retail or service industry employees, there's an additional requirement there that's not on the slide, and that's that more than 50% of the employee's total earnings in the period must be from commissions. Then they don't have to be paid overtime for the retail or service industry employees. Um, Also, the employer can require employees covered under FLSA to work overtime, and if they refuse, they can be terminated. And there are also other exceptions that we'll get into in a moment. However, for example, we'll just go into the other examples here. But if you're working in these industries, for example, hospital employee with the overtime for 80 hours or over, or the retail or service industry with high levels of commissions or remedial education, I mean, there's additional regulations and exceptions with that. So I highly recommend that you read the rulings on those. Additionally, there's compensatory time off obligations and or that can be granted in lieu of overtime. And so the in it, if an employee is in public safety, emergency response, or a seasonal activity, they can accumulate up to 320 hours times 1.5, which is 480 hours of compensatory time off. And if they don't work in those activities, they can accrue up to 240 hours of comp overtime instead of overtime. So then they get to take that when they would like, and effectively they are receiving time and a half uh, for those hours. And then there is also, if an employee leaves the organization, then they must be paid out in cash for that unused comp time. There's also some exemptions from FLSA provisions, which could be for some or all of the activities. This includes white collar workers defined on the next slide, such as executives, administrators, professionals, business owners, highly compensated employees, computer professionals, creatives, and outside salespeople. They must be paid at least $684 per week, and they also must be paid on a salary or not hourly basis. And a proportionate share of the exempt employee's salary for time actually worked is only allowed on the first or last week of the employment. So salaried workers get paid the same amount no matter how many hours in a week they work. And blue collar workers, well, assuming that they're covered under the exemption, blue collar workers are always entitled to overtime pay, including police officers, EMTs, firefighters, paramedics, and licensed nurses. Uh, Also, just as a side note here, putting someone on a salary doesn't mean that the person is exempt automatically. They still have to be covered. Like just saying that someone is on a salary doesn't mean that they're exempt to overtime. They have to be salaried and they have to be in one of these professions. And this also includes accountants. And that doesn't mean accountants can't be paid overtime. But in my career, I have not been paid, like I've never been paid overtime. And that's allowed under this provision here because I work in a as a professional accountant, which requires advanced knowledge or learning and, make more than $600 a week, paid a salary no matter how many hours I work. I'm making the same level of salary. And so I don't get paid overtime. The assumption of the job is that you work what is required to get the job done. And there's also the Equal Pay Act, which amended the FLSA that requires men and women performing equal work must receive equal pay. This applies to any employer having workers subject to the minimum pay provisions of the work wage and hour law, which is the minimum wage requirements we just talked about. But it still applies to white collar workers and outside salespeople, even though they are exempt from minimum wage standards or overtime standards. And it prohibits discrimination by paying wages to employees of one sex at a lower rate than those of the opposite sex. And if the differentials are allowable based on some sort of seniority or merit system or a uh, quantity of production system, then they would be allowed. But there would be the employer must retain documentation to support that fact. Uh, the fact that it's not based on sex. And if unlawful pay differential exists, the employer must raise the lower rate equal to the higher rate. So this isn't an excuse for employers to cut the wages of people that are making more. It's meant to bring everybody up to the higher rate. And under the FLSA, the Secretary of Labor issues regulations that restrict the employment of individuals under the age of 18, so restricting child labor. And this is in non-farm occupations. The employees aged 16 and 17 they might work an unlimited hour in non-hazardous jobs. However, 14 and 15-year-old limited to retail, food service, and gasoline service, and they have some specific restrictions related to hours. For example, many of them, they're not allowed to work during school hours so that they still have to go to school. Um, and then states might also have additional requirements for 16 and 17-year-olds that also they might not be able to work nights, they might not be able to work during school, etc. And there also is different minimum wages as well. And for agricultural occupations, the on children aged 10 and 11 may work as hand harvest laborers outside of school hours and also only from June 1st to October 15th. So, employing under age 12 is generally prohibited, but there are exceptions. And then the employer needs to have a certificate of age, which shows that the minor has reached the stipulated minimum age, and there's serious fines that can result from violations here. And the wage theft and penalties, there are significant penalties for wage theft. Employees have recourse when their employer does not pay them according to the law or misclassifies them. So the statute of limitations here is 2 years. So they have 2 years to sue and pay for mistakes and 3 years for willful mistakes. And the government may bring civil or criminal suits against employers who violate this. And there's also that there's this is both a federal crime and there's a state crime. So Minnesota wage theft is, depending on the degree, can be a felony, and the penalties can result from misclassifying workers, violating wage and hour provisions, or providing false data, and repeated violations. And um, there's also penalties for repeated violations and also for child labor violations. And the FLSA does not cover pay for weekend or holiday work, pay for holidays, vacation, or severance, holidays off, vacation time, limiting hours for 16 of age or over, or granting sick leave. There might be other laws that do govern how much holiday pay or all these things that are required, but not this particular law. Uh, and for just a quick discussion activity, um, this particular company follows the rules and regulations in the FLSA and the minimum wage law. They have an extremely high workload, and the workers are required to work more than 40 hours in the work week. The management is seeking advice on overtime hours and pay and wants to know if there are any exceptions to the overtime provisions. So the rules that apply to this company, the overtime pay is required for all hours worked in excess of 40 hours per week. Uh, However, there's no specific requirements. It's over 40 hours in a work week, but there's no specific requirements for Saturdays, Sundays, holidays, or other special days, assuming that the employees have not hit 40 hours per week. And the law also requires, um, you know, overtime pay to be time and a half the regular hourly rate of pay, and the regular rate cannot be less than the minimum wage. And also, the payment for overtime pay must be made on the regular payday for which the time would would have been paid for anyways. There's also some exceptions for hospital employees or retail and service employees, assuming that they're in a mostly commission-based sales role. So over half the wage comes from commissions, and they're already making time and a half the minimum wage at a minimum, so $10.88. Uh, and there could also, depending on if the workers in this company are uh, professional service workers or highly compensated employees and they're paid on a salary, there might also be an exception to the overtime pay requirements there as well. And so another key point in the wages and hours calculation is determining the employee's amount of time worked. And the principle, so this is defined as the principal activity of employment. And so the principal activities are preparation of the work statement, preparation of the workstation, or changing in and out of gear, travel, idle and wait time, rest periods of 20 minutes or less. The employer can't make the employee check out for these. And then the meal period, unless so there's the bona fide meal period, unless the employee must perform some tasks while eating, so generally 30 minutes or longer. Right, so there's break requirements and there's lunch requirements, but they're not excessive. Like an employee is not going to get paid for an hour-long lunch. And generally, the hours counted as working time must include all the time that employees actually work or must be on duty, which has to be like there's a distinction between the principal activities and the preliminary and post-work activities. And the preliminary and post-preliminary activities are compensated if there is a agreement between the employer and the employee. It's customary in the industry, or it's an integral and indispensable part of the employee's principal activity. But again, the principal activities are always must be paid for, and that's travel if it's part of the principal workday, like traveling, like if the employee is on the clock, traveling to and from clients, and as opposed to just reporting to work at the client. Um, there's also work at home for non-exempt activities, even if told not to work at home. Like the employer should have a clear statement and policy on manual, like on email work and outside of like clocked in hours for hourly staff. Uh, there's also should be paid for sleep time if they're required to be on duty. Uh, and then there's also training sessions and waiting for doctor appointment on an employer's premises. And going back to the preliminary and post-preliminary activities, the Portal to Portal Act defines these activities. They don't need to be counted unless it's customary or contractual. For example, checking in and out of the plant or checking in and out, like for Amazon, it takes a long time for employees to get into the warehouse. So there might be some, um, right? That's where this situation is important to consider. But unless it's customary or contractual to pay employees for checking in and out of the plant, it's not required. Unless there's a prior agreement between the employer and the employee, or it's customary, or it's an integral and indispensable part of the role. Also, not compensated is absences due to illness unless there's a separate law that requires pay due to for sick time off or tardiness. Now, an exception to the tardiness rule is if the employee must be paid for fractional parts of the hour. Different courts have issued different rulings on whether the employee, like how to particularly split up the time. But generally, the best way would be if an employee clocks in and then they start getting paid that minute and then they stop getting paid the minute that they clock out. So just a quick polling activity. George is an employee of an IT company. He undergoes on-the-job training and some additional training sessions are scheduled outside of regular work hours. So which of the following can be considered part of Georgie's George's working time? Both of these. Both of these would be uh, however, generally both of these, if they're required, additional training sessions. However, uh, if all of these conditions are met, then it is not required that he get paid for them. For example, if attendance is voluntary, if the employee does not produce any goods or productive work during the lecture, if the lecture takes place outside of regular work hours, and if it's not directly related to the employee's work, then under all these conditions, then it would not be required to be paid for that time. But if any of these conditions are true, he would need to be paid for that time. And records used for timekeeping. So there's a number of documentation required. For example, timesheets, time cards, computerized time and recording system, for example, badging in and out, or signing in on workday and clocking in that way. And there's a lot of touchscreen kiosks using or biometrics using the internet, cloud-based systems such as Workday to clock in and out, and also employees being able to really just clock in on their own computer is the most common these days. And in this discussion activity, we're taking a look at transcript solutions, and they use time cards to record time worked by the employee. However, most of the employees take their work home, and the payroll department is not really able to keep track of those working hours correctly. So, uh, we're going to come up with some automated systems for time and attendance recording that could accommodate these outside of work hours uh, documentation, and then discuss the various systems available. And these new generation systems, especially being able to log in online on the employee's own computer or uh, using a touch screen to sign in and out at the employer, they're very convenient. The employers can assemble the data more quickly, eliminate calculation error, easier tracking, faster, and it can be put in the scheduling. Um, Also, you know, it could be internet based, biometric based. There's also IVR or interactive voice response system. Some employees can call in using a cell phone or app on the smartphone for time collection. And it could also be cloud based, employees using a computer to clock in or out. I mean, I know some people who have worked at Walmart recently, and everybody's given a cheap cell phone, and that's what they use to clock in. And it only allows the employees to access certain functions on the phone if they're clocked in because that's how they regulate that people are not working off the clock. And it only allows employees to clock in if they're at a location where Walmart allows them to be working. For example, at a Walmart location, or if their role is a delivery driver, right? It could be anywhere. But that is a very interesting way to regulate employee time cards. And the most common pay periods, now moving on to computing wages and salaries, the most common pay periods are as follows. So weekly, 40 hours in a pay period. Biweekly is 80 hours. Semi-monthly, or paid on the 15th of the month and the final day of the month. That's 24 pay periods in a year, and there's different hours every pay period. Monthly is 12 pay periods a year, and there's different hours every pay period. And an employer may have different pay periods for different groups in the same company. For example, salaried might be paid semi-monthly, where the hourly workers are paid weekly. And there's two methods for calculate. So there's two methods to calculate overtime pay. And the first is calculate gross pay, which is 40 hours times the rate, and then take the overtime hours times the times the overtime pay rate, which is time and a half times the employee's regular rate. Uh, and then that calculates the overtime pay separately. Those are added together to calculate the total pay. And the other method, or the overtime premium approach method, is to calculate gross pay for all hours worked, which is overtime hours times the employee's regular rate, and then calculating the overtime premium, which is the hourly rate divided by 2, because time, right? That zero point 0.5 is the premium for overtime. And then multiplying the hours in excess of 40 hours multiplied by the overtime premium rate to get the overtime pay, and then add those together. There's also the employer may calculate, to pay overtime at a higher rate to calculate the total earnings of all jobs, divide by the total hours worked, and then take 1/2 of this rate, multiply by the overtime hours, or use an overtime rate based on the job performed after the 40th hour. But no matter how the calculation is done, It all comes to the same number, which is the overtime hours get paid at 1.5 times the regular hourly rate. And here's an example. Uh, the employee works for Tinto Incorporated for job A, paying 14.50 an hour. Job B paid $11 per hour and 6 hours of overtime at the second second job. Oh, six 6 hours at job B, but only 3 of those hours are overtime hours. And so calculating the regular pay is 1450 times 37 hours plus 11 times 6 hours is 602.50. The overtime premium is calculated based on the higher rate. So it can't be calculated. So for example, if there is different rates for different jobs, the overtime pay is at the job with the higher rate. So for this employee, the higher rate job is 14.50 an hour. Job B is $11 an hour. And so the overtime premium is 14.50 divided by 2 for 3 hours is $21.75. So total pay is $624.25. And if the overtime pay was paid off of the lower rate, then the employee would only get paid $619 because they'd be paid time and a half on the for $11 instead of the 14.50. However, the overtime pay is required to be paid at the higher rate. So the two methods that are allowed, oh, the two methods that are allowed are again the method one here, method two here, and notice that the difference is only because the 1401 is different than the 1450 per hour. And so that's just a typo here on the slide. But calculating the um, overtime premium just on the 3 hours calculates the total pay. And steps for converting period wage rates to hourly rates. So first we have to annualize the salary, calculate the regular weekly gross pay. So divide have annualize the salary for the full year, divide it by 52 weeks in a year, then divide it by 40 hours per week, assuming it's a full-time equivalent job to calculate the hourly pay, then calculate the overtime rate and the add the overtime pay to regular gross pay. So for in this example, Farron is a non-exempt employee, paid $1,500 per month, paid weekly, 43 hours per week in one pay period. Note that even though Farron is salaried, they must be paid the total, like they must be paid overtime. They're not an exempt employee. And so we take 1,500 times 12, that's $18,000 per year, divided by 52 weeks is $346.15 per week, or 865 is the regular rate. And so then we take time and a half times the regular rate is 12.98 for overtime, and then 12.98 times 3 hours plus the regular salary of 346.15 is 385.09 gross pay for the week. And under here's another example. Eve is paid $2,000 per month, which is $24,000 a year, and then worked 4 hours of overtime pay in one pay period, which is the regular salary would be $1,000 semi-monthly. However, the weekly rate is dividing the 24,000 annual the by 52 to get 461.54 as the weekly rate. Then dividing that out to get the hourly rate of 11.54. Then 17.31 is the overtime rate. Um, Taking 17.31, which is time and a half times 11.54 times 4, we get 69.24. So $1,000, 69.24. That's the gross pay. And here's another example of a biweekly employee, so paid every 2 weeks, 11 and a half hours of overtime pay in one pay period, and makes 2,200 per month. So we take the monthly salary, annualize it to 26,400, and then divide it into biweekly pay periods is 26 pay periods in a year. So that's the regular pay for 2 weeks is 1,015.38, or 507.69 per week, which is 12.69 an hour. So the overtime rate is 1904 times 11.5 overtime hours, uh, plus 1,015.38 is $1,234.34 gross pay. So, and Jennifer, another uh, problem exercise. Jennifer worked two different pay rates during the past week. Her main job paid $25 an hour, while the extra job rate was $20 an hour. She worked 35 hours at the main job and $10 at the extra job. What is the overtime rate that needs to be paid to Jennifer? So the higher rate needs to be paid. Uh, and however, in certain circumstances, all of these options are acceptable by the employer. So the employer could pay the higher rate for the overtime hours, or taking the total earnings for both jobs divided by the total number of hours, so taking a weighted average and multiplying that by the that to use the overtime to arrive at the overtime pay. Or if the employee agrees in advance, taking the rate at the job performed after the 40th hour of the work week, which in this case would be the lowest rate for Jennifer because she worked at the extra job uh, 10 hours after working the 35 hours at the regular job. So if they agree to this in advance, they can use that. Otherwise, it's the weighted average pay rate or the higher rate. And here we go over a salaried non-exempt employee. So Felicia is a non-exempt employee. She works 1,500, she gets paid 1,600 per month for 35 hours per work week, paid semi-monthly. Overtime is calculated as regular hourly pay between 35 and 40 hours per week. And then time and a half after 40 hours. So she has 16 hours of overtime pay, one pay period, of which 6 hours are over the 40 hours per 40-hour weekly rate. For example, a 2 week pay period for Felicia would be uh, generally 70 hours, but for a 40-hour a week, it would be 80 hours. So the extra uh, 10 hours is paid at the regular rate, and then the extra 6 hours beyond that is the time and a half rate. And so annually, Felicia's making 19,200 annually, or 369 per week, divided by 35 is 10.55 an hour is the regular rate. And so she's paid $800 is her standard semi-monthly gross. And then additionally, she needs to get paid $10.55 times the 10 hours to get up to 40 hours a week, and then another 1583, which is time and a half, to times six for the overtime pay, and then $1,048 in gross pay from there. Now, employers must pay employees for uh, fluctuating schedules fixed salary despite they may, if non-exempt employees are paid for a fluctuating work week, the employers may pay them a fixed salary regardless of the number of hours worked. And then the overtime is calculated by dividing the normal salary by the total hours worked. And then a time and a half premium is paid for all hours worked over 40 hours per week. Or they can divide the fixed salary by 40 hours, which then gives a different pay rate each week. And then a time and a half overtime premium is still paid for all hours worked over 40. And this really is just how to calculate this to make sure that the employee is making a fixed salary, regardless of the number of hours worked. In this particular, right, some employees need to be paid like that. Um, so just taking another look at this, if the overtime is calculated by dividing the normal salary by the total hours worked, um, then an extra time and a half premium is applied. Or if they divide a fixed salary by 40 hours, which gives a different rate of pay every week. And then time and a half is applied for all hours worked over four. So it's a different way to calculate overtime based on these two methods. Um, there's also an alternative called the BELO plan or BELO, and it's appropriate for a very irregular work schedule, but it's much more restrictive than the fluctuating work week method, which is this is the fluctuating work week method, but it also the flux it the fluctuating work week method is generally better for employees though, because they're getting paid that time and a half overtime premium for hours over 40. However, there's deductions for the BELO plan. Um, there's deductions cannot be made for non-disciplinary absences. There's guaranteed compensation cannot be for more than 60 hours per week. And the salary is calculated as a wage rate multiplied by the maximum number of hours and then adding another 50% for overtime. And there must be an agreement between the employee and the employer beforehand under the BELO system. And there's also a piece rate system used to pay workers according to their output, and it must equal the minimum wage with overtime. Uh, and it's calculated in one of two ways. So there's method A, which is units produced times the unit piece rate and the regular earnings. And then take the regular earnings divided by the total hours is the hourly rate. And the hourly rate times time and a half is equals the overtime premium. Regular earnings plus the overtime premium plus the overtime hours equals gross pay. Otherwise, there's method B, which is units produced in 40 hours times the piece rate plus units produced in overtime times 1.5 times the piece rate equals the gross pay. And here's an example of calculating piece rate gross pay. So for example, there's uh, an employee paid for inspecting units, and 4,812 units are inspected in 47 hours, 47.25 hours. And so 600 of those units were produced during the extra hours. And the employees paid 12 cents per unit. So calculating the gross pay in both methods is as follows. And under method A, we take the rate time the total units times the regular rate, get the regular earnings, um divide it by the total hours to get the hourly rate of 12.22, multiply 12.22 by zero point 0.5 to get an overtime premium, and then multiplying that overtime premium by the number of hours. Uh, Method B is only using the overtime, counting the actual number of units produced after the 40th hour of work. And uh, we take 600, which is the extra units, times 12 times time and a half to get the overtime units, and then the regular time units times 12 cents to get the regular units, and that's 613.44. And um, this produces less total pay because if we divide 4,212 divided by 40, it's 105 units per hour. However, if we take 600 divided by the 7.25 overtime hours, it's only 82 units per hour. And so that's why method B results in a lower rate of pay or a lower total pay. And then we can also calculate piece rate gross pay uh, with this example here. So Rosen gets paid 8 cents per case and inspected 6,897 cases in 43 hours, 423 cases of which was overtime. And in this example as well, the overtime rate was like uh, time and a half. So we can take we can calculate the regular earnings by divided by the total hours, multiply by the hourly rate uh, by half to get the overtime premium, 634, and then 634 times 3.5 hours plus 551.76, the regular earnings is the 573. Otherwise, method B, we take it um, only the units produced in overtime at the time and a half rate. And so then because the overtime production was slower, then this method B results in less pay. But if it would result in more pay if it was more productive. And there's also can be special incentive plans that entice workers to produce more. And it's more complex than time rate or piece rate systems. For example, producing 18 cents per unit for up to 2,000, and then 2,000 to 3,500 is 24 cents a unit, and then over 3,500 is 36 cents a unit. And that incentivizes getting producing more at higher rates. There can also be sales commissions, for example, revenue paid for each transaction. Uh, so And it could also be commissions can apply after he meets a minimum quota, or it could apply up to a certain quota. There's a lot of different ways to incentivize employees with commissions. And in this example, he has a minimum quota of 3150 and he sold 40,000, so he gets commission on 8,500 times 2% is $170 in commission. And then the base wage of annual base salary paid bi-weekly. So the annual salary of 30,000 divided by 26 bi-weekly pay periods is 1,153.85. And then the total pay is 1,323.85. There's also can be non-discretionary bonuses, and they're bonuses that are part of employees' wage rates must be included in the period covered by the bonus. For example, like this is a non-discretionary bonus. So this is like bonuses that are promised to employees. And so, for example, if an employee makes 40 hours a week, then they get a bonus on top of that. Like then that's and they earn that. Like there's clear steps to earn the bonus. Or for in this example, a safety performance bonus. The overtime pay is calculated based upon this rate. So for this example, Jamil earns 13.50 an hour and had a safety performance bonus of $85. And so the total pay is calculated as 13.50 an hour times 44 hours plus, which is 594 plus 85 hours is 679 divided by 44 hours, 1543 regular rate of pay. Then we take 1543 divided by 2 is $7.72 overtime rate, which includes that safety performance bonus premium too. And then multiplied by 4 hours is $30.88. Then the total is $709.88 in total gross pay. And under profit sharing plans, they are ones in which the employees share in the corporate profits and can receive cash payment, profits paid into retirement or savings, or profits distributed as stock. And Catherine is a non-exempt employee. She has an agreement to work 36 hours a week, but she ended up working 45. How many are overtime pay for the overtime pay calculation? That would be 5 hours are paid at time and a half. And then the under 40 hours are paid at the regular rate. And so, in summary, we went over the main provisions of the Fair Labor Standards Act. We defined hours work and described the main types of records used to collect payroll data, calculated the regular and overtime pay, and the a few distinctive compensation plans as well. Thanks, everybody. And that's all for Chapter 2. Make sure to subscribe and like this video for so you can stay up to date on future payroll chapters. Thanks.